Hi, I'm Peter Rose, founder of Longwood Currency Trading. How do you find profitable Forex trades? You have to look for them. That sounds really stupid. What do I mean by that? Well, there's all sorts of chatter out there in video land and instructional world about how you go about all of this analysis and research and all that other stuff in order to determine whether you've got the opportunity to hit bid ask, to go in and take a trade. But what it all comes down to is looking and trying many times in order to find the proper trade. The conservative best practice advice is that you stand back from the trading screen and watch it until certain characteristics take place, and then you go in, like a sniper would go in. What's creating this conversation is this. It's a beautiful rock that my granddaughter found. My wife and I took her up to Bellows Falls, Vermont, and we had an overnight trip up there and then down to it's called the Chickering Mine. It's a rock, or where members of rock clubs and stuff go and look for rocks. I mean, I can't think of anything less that I'd like to do, but I was the designated driver, so off we go to this adventure. Let's call it an adventure, where they walk up to the mine and they got all their tools and stuff, and then they just start looking everywhere, and they turn over dirt and stones and sift through the sand and the gravel, and they've got these sieves that they can pour stuff into to filter out all the little stuff, and then they get left with the larger pieces. And they're looking for specific characteristics in the rock. I don't know anything about rock hunting, but I've watched them. And I'm sure that you can understand how you would go about looking for a rock. But when you actually find a place where you think there would be an outcropping of the particular kind of rock that's indigenous to that area, you get out your little pick and you start picking away at the rock. And one of the things that they tell you that you absolutely have to have are goggles, safety goggles, because as you're picking at the rock, you get splinters that would come up and they would hurt you. They would hit your eye. Well, Peter, what's this got to do with Forex trading? It's got everything to do with it. You know, when we try to reinvent the wheel about how to do something, it becomes problematic as to whether we're going to be able to figure it out ourselves. That's why those of us that are men who are assigned to put the grill together or some bookcase or something end up throwing the hammer through the wall or something, because it just doesn't make sense, because we don't take the time to read the directions. We don't probe and set out all the pieces in the order that we're going to need for the construction of the particular thing that we're trying to build. It's a process of experimentation, not of rigorous science. Let's equate our quest in our Forex trading in trying to find a viable place to go in and enter so that trade will be profitable. We don't know any of that, right? We use our analysis to develop a better probabilistic view of it, but that's not how we start. You don't start, this is one of the things I think that I need to stress more with the students, the folks that take my fast track course do. It's a logical process through a methodology, the life cycle of a currency position, in order to achieve the solution set for when do I know that I have a good entry point, how do I manage that trade, and then how do I exit that? Those are the three phases of the life cycle of a currency position. They're the three problems that we have as currency traders. But there's a step that goes before that. And it's so obvious that though I mention it to students, it's not actually written in the course book because it's too stupid. It's just looking at the market, just looking at it, and taking that next step, which is, all right, we've got a general sense. You know, the conditions of the entry rule are sequential. If this is true, then I have a trade. This is true, then I might have a trade. This is true, then I might have a trade. This is not true. I'm not gonna hit bid ask. Those are conditional conditions to the rule, the entry rule. But there is a step that goes before that, and it requires a little experimentation. I think we get so hung up in looking for the magic answer to, okay, boom, let's go in and take this trade, that we forget that it's okay to just try it. When you're going to jump off the side of the pool to go swimming, you don't just jump in the water. Don't we all sit down on the edge and drag our feet around in the water to test how the water is? Well, that's getting wet. That's making a partial commitment to getting into the pool. We could still decide not to get in the pool, but we all tip our toes into the water before we get in. So why is it not part of the entry of our trading to just take a trade and see? We'll add that to that life cycle of a currency position, is that we're looking generically at the situation that's out there. And we're saying, you know, basically, does this thing have enough momentum to go to the profit target? And there's certain criteria that from a quantitative standpoint, for example, the differential between the current candle size of the last two candles to that of the current ATR, which we refine quite a bit in determining momentum in the fast track course, because to kind of make it a little bit more precise. But now you're taking your brain power up and your time trying to go through these mechanics of solving whether each one of these conditions is valid in order for you to take the position. Why is it that when I go in the morning and turn the trading platform on, as I did this morning, and I just look at the chart and I go, is there anything that I got to do right now? Is there anything that I might have to do in the next period of time? I mean, what's the past price action been, and what's the probability that all of a sudden it's going to go from its dead state to a really active state, or maybe it's a really dead state and we're going to go into NFP? What's the viability that I'll have something to do later? If there's nothing to do right now, to sit down and hit bid ask or go through the analysis of the conditions, then does the general battlefield look like there might be something that can be done later? And if that's not true, then I'm not even going to worry about coming back to the trading platform. I'm not going to try anything, because my experience says nothing's going to happen in the foreseeable future. I'm not going to worry about it. I'm going to go have breakfast, or I'll walk the dog, or I'll answer emails or whatever. But I'm not going to be sitting in front of the trading platform looking for a trade, because I'll find one in what I've termed an anticipatory trade before in my videos. But when I sit down and I look and I go, well, things are looking like they could go right now, what would be wrong with taking that trade right then? When you are experienced, you don't need a checklist of shit that you need to go through. You don't need to have the rules or the conditions of the entry analysis in front of you. So you, okay, that's true, that's true. You just look at it, boom, and it all goes together, right? That's your experience. Now, the folks that are in my Fast Track course don't have the experience to do that. So they do have to go down the checklist. And that's okay because it slows them down. And it prevents them from doing anticipatory trades. But as you grow in experience, none of that is really necessary because you just go, it's okay. When I'm going to go out in the morning, I just, as I'm coming out the door, I can look at the environment and say, is it snowing out? Do I need my boots? Is it raining? Is it going to look like it's going to rain? Is it all this stuff? I'm heading for the door. And then I go, oh, shit, looks like there's clouds out there. I've already gone outside. Looks like there's some clouds out there. I'll go in and get a jacket just in case. And then as I'm continuing on my way out, I may check the phone to check the weather to say, well, there's, a 40% chance today. Oh, okay, well, I'm glad I brought my raincoat. Maybe the 40% chance won't happen. Maybe that's down in the valley somewhere and not going to be up here. But there's a probability of rain, so I'm going to prepare for it. But I already headed for the door before I made any of those decisions, just looking at the environment. And so what would be wrong with taking what to a beginner would be that anticipatory trade? The difference is, to try things out. The difference is that it's not an anticipatory trade if you're doing a probing trade. Yesterday, the market was not really moving very much, and the swings were not really significant enough. So I thought, well, I'm going to have to probably trade in a flip reverse type thing. Maybe I'll grab a couple of pips going up and I'll grab a pip coming down and, accumulate some number of pips for the day. But I'm not using my rules because there's got to be 20 to 30 pips between where I'm at and the profit target. But the fucking profit target, there is none. There's price action moving, but you don't set a profit target under those conditions. They're almost scalping type conditions without the volatility. So sometimes you have to try it. So you go in, and if it doesn't work out for you, you're out in 3 pips or you're out in 2 pips. And you say, oh, well, you go in, you're losing a pip and a half or a pip just by going in. Well, yeah, that's true, but you go in, a price reacts negatively against you immediately, and you're underwater, that's okay, a couple of pips. And then it goes up a couple of pips, and then it comes down, and it goes up 3 pips, and then it comes down 2 pips, and then it goes up and it comes down, and you're a couple of pips underwater, and you go, I'm out. Because it isn't doing what you thought it was supposed to do when you took that long trade. You said, I'm betting that it's going to go long, 3 or 4 pips, and I'm going to get out. Well, it never made that in any kind of a continuous movement. It kind of jig-jagged around, and you say, well, you're paying more attention to it at a more granular level when you actually are committed with your money than you are if you're just sitting there analyzing. Analysis paralysis. Go ahead and take the trade. Now, if you don't have a lot of experience, and most of the folks on this channel don't have the experience to do this, and if you try it, you're going to end up in deep shit. So just know that if you were to take a course or have some mentoring, that this would be one of the things that you're taught how to do. Are you going to be able to figure this out on your own? You might, but how many tens of thousands of dollars do you want to spend learning how to do something that somebody already knows how to do that can provide you guidance so you don't lose 40 pips in probing, or you misinterpret an anticipatory trade from a probing trade. So when we're looking at the market, there may not be anything to do right now, and there may not be anything to do at all or whatever, but in the interim there, somewhere along there, you're seeing that the general waviness, what we call the periodicity of a wave, is up 6 or 8 pips and down 3 or 4 pips and up 2 or 3, 4, 5 pips and down. You're getting this gradual rise or fall in the trend. It's not even a trend because you're down on a 1-minute chart or you're down on a 5-minute chart. But you're seeing probabilistic, predictable 5 to 8 pip movements, of which you could probably capture 2 or 3 pips. So now you're a sniper, but you're sniper on a different scale. And so you need to, you go in and you probe. Oh, you didn't get it right. So you come out and you lose 2 pips, and you come out and lose 3 pips. I lost 3 times in a row, just a couple of pips, and then I gained maybe a pip or 2. I was over 4 or 5 trades. I was, I think I was up 2 pips. And then I said, well, I've got 2 pips to spare and I'll try it. And then all of a sudden I was down 8 because I was in and out, in and out. And I waited 5 pips on 1 and 3. And it's not hard to get 8 down. It's not hard to get 8 up either. But I was 8 down. So I had to step back from it. I go, oh, well, look, you look back over the last 15 or 20 minutes that I was up there farting around. And it was... If I would have been looking at it then, if I would have been starting to look at it now, I say, well, there's not enough defined movement at this particular time to even do that kind of probing. But I didn't know before that because the period before that indicated that you could do that. So I'm sitting there at 8 pips down, and I thought, well, okay, I'll just have a cup of coffee and wait and see what happens, or maybe I'll close the day at 8 pips down. I didn't know. But I guess the critical factor is I'm not falling in love with this, oh, I've got a profit target 20 or 30 pips away, because I don't. So my ability to get out very quickly is heightened rather than me fixating on, oh, all these conditions are met in my rule, and so therefore I'm going to wait another 5 pips to confirmation and confluence among some other things, and now I'm in, and it staggers on. It goes 6 or 8 pips, and I set a floater behind it, and that's how you make your trade on a day trade basis. And you may sit there for 45 minutes while that thing goes 10, 20 pips, and then you close it out when you think it's run its course. But if you're doing these probing trades, you're not sitting around there waiting for an 8 pip reversal to go out. If it's 1 or 2 pips, or even on the take, and it goes down, but it doesn't recover right away, there's no momentum on a small scale basis in order for you to warrant sitting around waiting for the thing to go. It may not go. The probability at that point is probably less than jump ball, and so you get out like I did. And so about 40 minutes later, price started to move. There's a big drop in the price, 8 or 10 pips. And that seemed to be continuing along that line. And so I thought, okay, I'll get in. And so I made 3 or 4 pips back, and I thought I was in sync with the thing. And so I went all the way in. And unfortunately, it was a fade, and I got it wrong, and I was in too heavy, and and I got out, and I was I think I was down 8 or 10 pips for that period. And I go, oh, this is just stupid. I was 8 down, I came back, and I'm 10 down. Now I'm done for the day. So, and that was very disheartening because I've been down the last 4 days. I've been negative 4 days. So I'm beginning to think I don't know what I'm doing. But that's just the name of the game, is that sometimes you're clustered with not able to do anything. So if you're going to do this probing, you may be wrong 4 or 5 times in a row. So you have to ask yourself, if I'm going to be wrong 4 or 5 times in a row, do I want to be 4 or 5 times wrong my normal entry stop distance? And the unequivocal answer to that is no, you don't want to be a 10 pip 4-time loser for the day. So you have to rethink everything if you're going to be doing probing trades. And again, probing trades is not scalping, it's probing. And there's a big difference. Again, I've said this like 3 times because I can't overemphasize the fact that you probably shouldn't be messing around with this stuff. And if you're one of my students watching this video, I don't even want to hear you. I don't even want to sense that the stuff is rolling around in your brain, because it's deadly. You need a lot of experience, and you need to have multiple lot trading positions so that you're not screwing around with an 8 lot. You're probing on the one because you're just not sure. So you're used to making $300 a day. Well, okay, why don't you cut your load back to 1 pip and probe a little bit and see if you can make 3 or 4 pips. Make, $30, $40. What's wrong with that? If you made $40 a day each day of the 200 trading days a year, you'd have $8,000 or something. That's pretty good for just probing. The critical factor here is not how you find a trade, but the process that my granddaughter and my wife had to use in finding this rock that they thought was pretty cool. I don't know if you can see it. There's this, I forget what they call this green stuff inside there. But they had to chip away at the rock. The rock looked like it would hold something, and they had to chip away at it and break it off and go, oh, look what's under here. And that's the process of probing in the Forex market for experienced traders who've gone through, well, I don't know, you have to have gone through some formal education, because this kind of thing, you're just not going to be able to make this work. Be very aware of the education you consume and what people are trying to tell you to do. If you have any questions about this, and this is I debated whether I would do this video simply because it's really not probably within the scope of my viewership to be able to do. And I know you're all going to go out and try it, and after you lose 40 or 50 pips over a course of 4 or 5 days, don't come back and say that I didn't tell you not to do it, because I'm telling you not to do it. I'm telling you what you can do when you become more experienced and you probe with a small amount of your money until something proves out that it's going to be a long-term thing. When I was involved in losing that 8 pips originally, and I looked back over the price action, I said, oh, well, it's pretty obvious that I shouldn't have been probing at that particular time. But I didn't have that information when I started. So isn't it a good thing that I was probing and lost 8 pips at the small lot level, rather than going all in and committing to something and waiting for it to go 8 or 10 pips? So I could get out with whatever it is I'm going to get out, $300 or $3,000 or whatever it is for the day. I would have got chewed up. I'd have been sitting there watching that thing. And by the way, when you're doing this probing, you can't set stops, because you're so tight that your limit order there, the bank traders, they're just going to see that they've got that level 2 stuff on the Forex market. You don't. They're not putting limit orders in. We're the only ones that are putting limit orders in. Don't put limit orders in if you're going to do probing, because you're just setting out a red flag for the bull. And it's going to warp your thought process, and it's going to slow you down, because now instead of thinking about going in, get out, going in, get out, you're going in and where do I set my limit to get out, and where do I set my stop, and all that other horse shit. You're gonna have to fly naked on that, and you don't have the experience to do that. And you may think that you have the experience. Oh, I've been trading for 2 years and blah blah blah. Do you know how many people contact me that have 2 years of trading that are not successful and that are negative in their trading ability, and that they can work with me for the start of the fast track program or I do some consulting with them and they go, geez, I didn't know that. Geez, I didn't know that. Oh, I'm going to try that. You need the mentoring. I'm just telling you from an educational standpoint, you don't go to college and get a college degree without having teachers there teaching you. You can't just read the books and take the tests unless you're inordinately brilliant. Most of us are not. We need a teacher. We need a mentor. And so if you need more information about what this process is and what my particular process is that might be able to help you, send me an email and we'll chat about it, either through email or get together on a video chat at no charge. And I'm not going to try to sell you a course or consulting. I don't have time to work with a lot of people. I'm retired and I do this as my responsibility, I guess. When you develop a skill, I was taught in my 57 years that I've been in martial arts, when I started training, my master taught me that when you achieve a sense of competency, it's your responsibility to share that with others. That was my mandate, and that's where my line of people that have been with me 40, 50 years, some only stay 10 years, some stay for 6 months. But it's a process of sharing. That's what's ingrained in me. But I don't have the time or the desire to work with 100 or 500 people. My goal is sharing something with you. If I can help you out in a video chat and kind of solve a problem that you may have, that's great. But if you want more information on the process of trading, then you're looking at taking some mentoring, taking a course. Well, what's wrong with that? It's going to cost you some money to learn a skill. You have to take driver's ed in order to get your driver's license, so you get somebody teaching you how to drive instead of your dad. When you are looking at the Forex market, there are so many nuances and variances to it. Wouldn't it be better if you had somebody that's been over that path before that can kind of help paint the way for that? Well, the sun is beaten down. It's supposed to be 93 today. I bet I'm sitting in 93-degree sun. I'm done. Don't use the probing until you get experience. If you have questions about it, send me an email and we can discuss it. Maybe I can suggest something better for you to do that's safer for you than doing the probing. Maybe help you with your entry rules. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.